Welcome to Infinity Capital, everyone. My name is Raj. Today we are going to talk about RPG Life Sciences. So RPG Life Sciences belongs to the RPG group led by Mr. Harsh Goenka, right? So RPG group is a very big group. They are into infrastructure, tires, information technology, pharmaceuticals, energy, plantations and stuff, right? So what is RPG Life Sciences all about? They are into domestic formulations, which means they make formulations, basically medicines, right, which is sold domestically. Then they have their international formulation segment, right, which is a branded generics space, okay. And then they have the API segment, wherein they make active pharmaceutical ingredients, right. Now in the domestic formulation segment, 62% of their revenue comes from the domestic formulation segment. So they have brands like Azeron, Mofetil, Lometil. These are the brands that they sell in India. Okay, and they have 7 new products coming in FY21. Now, what are the therapies? Nephrology, rheumatology, oncology, orthopedics, gastro related stuff. So what we need to take into consideration right now is because of lockdown, because of corona, a lot of patients are not going for their regular hospital visits for oncology, for orthopedics, right? So for rheumatology, so the sales are going to be a bit depressed in these therapies. But whenever we have a decent amount of vaccinated citizens, we will see that these therapies will start picking up. Once we have more people going out, going for their regular checkups, we will see that these therapies will pick up. International formulation segment, 21% of the revenue comes from international. So they are catering to Canada, UK, Germany, France, Australia, so on and so forth, right? So these are regulated markets, okay, and it's a very competitive market. So the margins here are not that great. In the Indian market, the margins can be good if you are if you have market share in the therapies you are catering to, and if you have scale in the business, because it is a very different kind of a business. Another thing is that in India, you sell your products through medical representatives. So if you have a very good network of medical representatives, then only you can sell your products in a better way. So that also matters. Okay, in the API, 17% of the revenue comes from the API segment. So it has, so they are selling these APIs to Latin America, Germany, China, South Korea, Egypt, so on and so forth, right? So this is what the business is all about. Let's quickly look at the shareholding pattern. 72% is with the promoters, 27% is with public. I would have loved to see some sort of institutional interest, but there isn't any right now. The reason for that could also be because it's a very small company in terms of revenues and profits. So probably the institutions are not looking at it. Probably they need some sort of substantial sales, or at least 500 1000 crores, at least 60-70 crores of profits, right? Most institutions look at scale of a business before entering. So that could be one of the reasons why institutions are not there in this business right now. Cash flow, decent cash flow has been generated from operations, so looks pretty good. Net cash flow of 40 crores last year, pretty good. It's a debt-free company, no dilution in equity, very strong balance sheet. They have around 40 crores of cash on the balance sheet, so that is also pretty good. On the profit and loss front, this looks very good. I like to see companies which are constantly growing their sales. The sales has been constantly growing. Now if we look at this period, guys, between 2012 and 16, if you see that they went through the margin related issues, right? If you see the margin compressed, right? But since 2017, they were able to basically maintain their margins are at peak right now. So 18% of margins, these are peak margins for their company. So this could be one source of risk. We'll have to go forward and see how have they achieved this margin. Has it come because of COVID? Has it come because of operational efficiency? Has it come because they have some sort of market share in key therapies? So we'll have to, if you want to do a long-term investment, you could go and check, you find out what is the source of this increased margin in the past 2-3 years. If margins remain stable and sales keep on going up incrementally, we'll see profits also rising at a pretty quicker pace. So why am I interested in this stock? Because there are 2 years of constant traction in profits. This is something that it's sort of it's something that I like to see in companies where there are 2-3 years of continuous traction in the profitability in the company, expansion of margin. That is where you see, suddenly you will see that, the company is doing very well and stocks just starts exploding from there. So if you go and see Deepak Nitrite, alkyl amines, same thing has happened in those companies as well, right? So what we are seeing here is margin expansion over here, and sales have been going up incrementally. Profits have also gone up. So as compared to last year, profits are up about 30%. As compared to the last 2 to 3 years, profits have doubled. This is a very good sign, right? Quarter on quarter basis, the sales were higher, profits were higher too. Now on the PE front, if you'll see, the median PE is around 30. Okay, and the stock is currently trading at a PE of 19. So at an EPS of 24, if 24.19, even if the stock reaches its median PE of 30, we are looking at 750 rupees per share price for this stock. So this is what I'm looking at in terms of returns. I'm expecting the stock to reach at least 750 rupees, from a valuation perspective, right? So if you look at all other domestic formulation businesses like Ipca, Indoco Remedies, and what is the other domestic formulations business? Kaplan Point does some sort of domestic stuff. So Ipca and Indoco are the ones that I have in my portfolio, and they command good, valuations. So I'm not saying that RPG is at the same level, but looking at the fact that the whole market is going up and pharma companies are doing well, and even this company is posting good profits, margins are increasing, a re-rating should happen pretty soon in this stock. Let's do a quick technical analysis check. Okay, so let's look at the weekly chart. What has happened basically in this stock? After it got listed in 2008, it was pretty much sort of trading in this range, and then it broke out in 2015. So in March 2015, it broke out, and then it went up around 300%. Post that, it sort of consolidated in this area, and then it broke down from that price point. So from its all-time high, the stock has corrected, 75-80%, right? Now post-COVID, the stock has gone up by 263%. A lot of stocks have done that, so that's nothing noteworthy. But what's noteworthy is, from a technical point of view, is that if you see, the stock has been consolidating in this range. This is the range. It goes up, comes down, goes up, comes down, goes up. It's trying to go up, right? So it is trying to consolidate within this 20-25% range between 340 and 460. This is the range where it is consolidating in, and it has been consolidating in this range since the past 1 year. So my guess is that a breakout is overdue in this stock, right? So what is the strategy here? We'll quickly go to the daily, and we'll look at the moving averages as well. On our left, we have the 200-day moving average, which is trending upwards. 50 is trending upwards. This looks pretty good. And if you will see that the stock has just been going sideways, it's just very, sort of slow grinding sort of a move, right? So nobody likes to be in such stocks. So this will test your patience. It's not going to just blast away very quickly, just like other stocks, right? So the quality of the stock, the quality of the earnings also decides, if how the stock is going to move up. But the way this stock is going up, and these huge volume bars indicate that, you know, a rally can come in this stock pretty soon, you know. So if you see, whenever the stock is falling, it's on very low volume and it's going up on high volume, so it's a good indication. So on a daily chart, where can we accumulate? We can accumulate this stock between 430 and 470. This is the range that we can start accumulating this stock, right? And the timeline will be at least 2 quarters. At least 2 quarters. I would like to hold it for 2 quarters. Target, my target on this stock would be at least 725 and 750. That would be my target, right? So from 450 to 725, that's roughly around 300 rupees. So that comes to around 60-70%, right? So this is the analysis, guys. Another thing that you need to understand is that the stock was basically, it was within this range for a very long time, you know, within this range for a very long time, post which it broke down, right? So there are a lot of people who are stuck here who would want to get out. And that is the reason why every time the stock comes in this zone, every time the stock comes in this zone, you know, this is the zone, it's feeling the selling pressure. See, if it's came here, came down, went up, came down. The moment all the selling is absorbed, you will see a very rapid explosive move on the upside in this stock, right? Quick disclaimer, guys, this is not a buy sell recommendation, it's an educational video. Thanks a lot for watching.